Welcome to the Texas Oil and Gas Podcast, the show dedicated to bring you the news from the oil patch deep in the heart of Texas, with your hosts, Irae and Josh Shelton.
We're back with the Texas Oil and Gas Podcast. This is episode 146. I'm your host, Josh Shelton, my friend and co-host, Irae. Ryan, it's an interesting day today. Friday, when I left, I'll get my tooth pulled. Oil was around $45 a barrel, maybe a little higher. Next time I checked, it was bad news.
You know, I knew it was bad because I sent someone a text. I said, "Hey, if you want to walk me off the ledge, that would be," and I said that would be great, GIF. And this person sent back, "I wish I could. This is very bad." And that person, of course, is our guest today, David Blackmon. David, it's been a few days. Are you ready to walk me off the ledge, or do we need to up the life insurance policies?
Well, I'm not sure we need to update our life insurance policies just yet, but we're pretty close to a ledge here. About that.
So let's
it's a bad situation.
Yeah. So one thing we talked about in our little pre-show meeting was we want to kind of have this conversation, and we've got you for an extended period of time today. But we want to make sure that we kind of talk about it from multiple standpoints. So we have the folks who are on the ground working out there in the field. We have kind of the managers, the CEOs, the kind of corporate types, and then you have the kind of investor types. So we kind of have a wide range of listeners. So when we talk today, let's try to make sure we kind of hit it from different perspectives, because the impact of what we're seeing here is going to vary depending on kind of where you fit into the game. But let's go back into history just a little bit here. Josh and I have talked on the show extensively kind of about this idea of coming out the last downturn. It's kind of like getting a big 0 F on your grade, and if you have long enough and you make good enough grades, you can rebound from that. But we felt like before the coronavirus and all that stuff going into this year, that later on this year might be the time for shale producers who could withstand that to make it, because we feel like the prices are drilling would kind of slow down, production might come down, prices would go up, and it'd be good for shale producers. But this is I'm not sure if it's going to be a 0 F, but it's another F. So, what do you think is kind of break down the news for folks who may have not heard, and kind of your analysis of the news, and what should we expect from the shale producers this week?
Well, I think the shale producers, most companies are going to give this situation with Saudi Arabia and Russia a few days at least, maybe a week or two, to shake itself out. Russia has a history of blowing up, refusing to agree to these OPEC plus deals, and then a few days later coming back and agreeing to a modified deal. That could potentially happen here. There has been news reports over the weekend that that Russia was continuing to cooperate with the OPEC plus countries in monitoring the market. And that to me means they're still engaged and maybe looking for an alternative to just blowing the whole thing up. And the Saudis, their reaction is irrational. Just frankly, it was in 2014 too, when they tanked the markets. From their standpoint and their sovereign wealth fund, and the way their country makes money, this is a completely irrational act on their part to announce they're going to flood the market again. But they stuck with their guns for a year in 2014 and 2015, and it had major negative consequences for the industry here in the U.S. So, my hope is that Saudi Arabia is bluffing, trying to get Russia back to the table to negotiate a smaller cut in exports. They had proposed 1.5 million a day, maybe get them to agree to something less than that, and, get this thing going again. But if the Russians don't cooperate, there's really nothing OPEC and Saudi Arabia can do about it. So we'll just have to see.
Okay, so one of the former guests that we had on the show, Dr. Anas Ali Haji, sent in this to the show this morning. There is no end in sight in the oil market. If OPEC plus negotiations in June doesn't work out, then we have to wait until the market corrects itself, sowing the seeds for the forthcoming energy crisis. So from an analysis perspective, it seems that he's saying that he doesn't feel confident that the OPEC Plus meeting on March 18th is in. That's not a binding meeting, if I understand correctly. Anyway, so they'd make a proposal. Of course, OPEC can call a special security special meeting or whatever you want to call it.
Sure.
But the March 18th date is kind of thrown around. But I guess we should also say that it's not. We need something extraordinary, I guess, to happen. The next meeting is not really the meeting it's not a binding meeting. Is that correct?
Well, it's not today, but the OPEC Plus ministers could change all that tomorrow. I mean,
right.
This is a group that, they have bylaws and rules and all that, but a simple majority vote within their group can change what the nature of that March 18th meeting. But yeah, if they leave it to June, then we're going to see oil prices crash down into the 20s and stay there until June, and that, that will have very significant negative impacts on the domestic U.S. industry.
So let's talk about the folks on the ground, folks out there who listen to the show. They're working on a rig, or like Josh and I in the service business. How should they think about this? Should they be going, okay, get the resume ready? Okay, if it's only 2 weeks, maybe we can withstand it. How should they kind of evaluate this? Because these are the folks that are, that make this country and kind of the backbone of society, if you will. But right now there's a lot of fear from that side as well. So let's talk to them for a second.
Well, I was in the industry for 40 years. I always kept my resume updated. I never actually needed it, but you were always kind of on pins and needles. The market can change on a moment's notice. But yeah, I think that the first thing that would start to happen if producers decide this is going to be a long-term deal in service companies is you would begin to see scaling back on the number of drilling rigs, obviously, and the number of frac crews. That means layoffs in both the upstream and service industry. It would mean production levels, rather than rising as they have consistently over the past 4 years, overall production levels would begin to fall, and you could have, pipeline companies start to suffer significant major impacts from that, and having to lower their rates and thus lowering their income. And it's just this chain reaction that works its way from the upstream all the way down to the refining sector. Yeah, and you could even see impacts if this lingered on for a year and you ended up with significant reduction in production from the Permian Basin, then you could see impacts on the ports and the employment there. But, that's a long way off. And it's all speculation. But in the past, when we've had busts like this could cause, those have been kind of how that chain reaction goes. So if I was, a field worker, I'd be updating my resume. But I wouldn't just, necessarily think that you're going to lose your job tomorrow, because this could all turn around very quickly.
Yeah, and that's the second. Let's talk about that. You've kind of laid out some potentials to see this thing turn around, but do you feel like we're not coming off of $100 oil here? We're coming off of $55 oil, basically. It feels like the response time for the producers, which it's a good thing and it's a bad thing, I guess, that the producers will have to decide what they're going to do with, like you said, maybe the next week or two, because they can't they can't withstand this like they could maybe in 2014. If you go back to then, you remember reading articles. Harold Hamm sold all of his hedges thinking, the price is going to go back up. Well, those companies aren't in those positions today. So it feels like whatever the companies are going to decide to do, they're going to have to decide if they feel like, if there is no news out of Russia, out of the Saudis, out of OPEC, it feels like they're going to have to decide in the next 2 or 3 weeks. And if you start to hear the bad news, do you expect we'll see consolidation? Do you expect we'll see bankruptcy? What do you think that kind of looks like?
Well, and so you're right. I mean, we are going from 55 to down to wherever we're going and not 100. But the fact that we were at 55 means that you had a certain number of companies, a fairly healthy percentage of upstream companies that were already teetering on the edge of non-profitability to begin with at those prices, particularly with $1.80 natural gas, because everybody has natural gas in their portfolio. And you can't make a profit at $1.80 on shale gas. So So you already had a subset of companies that were struggling at $55. Well, at $30 or lower, potentially. Obviously, it's not going to take long for those companies to feel the pinch, particularly those that are heavily leveraged with banks or with private equity. And so, yeah, I mean, I think if this is something that is going to linger on for months and even into next year, then yes, I think you would see quite a few bankruptcies coming very quickly because this is all taking place real time today. We're right in the middle of debt redetermination season for the spring, and all those banks right now and all those notes that they are revolving credit lines, whatever they have with an operator, they're all this morning, right now. Their engineers and analysts are redetermining their price decks going forward and lowering them. And
they probably worked the weekend, to be honest with you, David.
Yes, exactly. They all worked over the weekend to do that. I mean, my wife used to be in that business. I know how it goes. And so, that's what's happening right now. And that's going to make it more difficult for this subset of upstream companies that are heavily leveraged to get those notes renewed. And if those notes aren't renewed, if that debt isn't renewed, then you could start seeing filings very quickly. If a producer is not able to meet its obligations, and I'm not going to name names, but we all know the vulnerable companies that are out there. So the net result of that would be, yes, I think you would start seeing consolidation during the second, third, and fourth quarters of this year as the healthy companies, and we all know who those are too, start buying up the unhealthy ones.
Yeah, I kind of put it like this to someone this weekend. It depends on right now if your client or your company you work for, you either have the prom queen or you're dating the drag queen, and you're about to find out which end of that spectrum you're on because and we all hope we're dating the prom queen right now, of course, but unfortunately for some of them, it's probably going to turn out that we don't have the beauty that we hoped we did.
No, and it's and I wrote a piece at Forbes over the weekend, talking about how this boom has been enabled by the fact that we had that OPEC plus agreement in place, supporting prices kind of artificially because those countries had already taken about 2.5 to 3 million barrels a day off the market due to that agreement. If it wasn't for that, the market would have been flooded and we'd have had $20 oil all along. And none of this big boom out in the Permian Basin or in the DJ or in the Bakken would have been able to take place over the last 5 years. So once you yank that support out of the market, then the price is going to go down. So the shale industry, in reality, for the last 3 years, almost 2.5 years, has been living on borrowed time, and none of these companies have made a lot of plans. I mean, they all have plans, low price plans in place. But there's no mechanism in the United States. There's no regulatory mechanism. There's no overarching, industry strategy to control production levels because they're corporations and they can't get together to control, to control production levels in order to influence prices due to, our laws in this country. And so, you just had this rush to produce as much as you could and generate as much income as you have. And now that price support's gone, and unless it comes back pretty quickly, you're going to see a vast reduction in drilling.
Okay, so let's talk about that. Over the weekend, obviously, there's a lot of people texting and blaming this person, blaming that person. And I said last week on the Energy Week podcast, David, I said, if I were Russia or if I were OPEC or whoever, and I had the money to withstand low prices, I would consider actually raising production to put the U.S. to gain market share. And when you think about it from a country perspective, because we're Americans and they're Russians and they're Saudis, it doesn't feel the same. But in reality, all businesses, they look at it, go, can I take more market share? So I'm not saying that what they're doing it's not obviously the Russians and OPEC isn't running a true free market. So I understand that. But it's also hard to go, well, they are, whatever their motivation is here, they are trying to take some market share up potentially, or they're trying to structure some other kind of deal or whatever you think's behind it. But, I've heard Russia blamed, I've heard Trump blamed, I've heard the Saudis blamed, coronavirus, we ain't talked about the coronavirus. I've heard the Texas Railroad Commission because they wouldn't regulate flaring. Whose fault is
Well,
this? I've heard the show producers obviously blame everyone. I've heard Josh blame because he's a communist, and so so he's a communist sympathizer. So there you go. So who do you blame, David Blackmon, for this?
I don't think there's anyone to blame. I think it's just the nature of the market as it has developed. I mean, yes, the Railroad Commission, for example, the Railroad Commission has the authority that they haven't exercised in 25 years to control production levels. And so does the North Dakota Industrial Commission, by the way, and the Oklahoma Conservation Commission or Corporation Commission, which also regulates the industry in that state. And so all three of those regulatory bodies could have stepped in a couple of years ago. Frankly, I wrote a piece in Shell Magazine advocating this, that they should step in and control production levels, because we're about to crash the price again if OPEC Plus goes away. And then you're in a situation where you are literally wasting our precious resource at these low prices. But that is such a controversial thing for regulators to do in those states. And for every company that wants a regulator to do that, there's another company that doesn't want them to do that. And so you end up with this big controversy where, blaming Trump. I mean, how can you blame Trump for any of this? The federal government has zero ability to control drilling levels in the upstream business. Yes, the president's regulatory agenda has made it easier to build pipelines in some states and help to enable, the growth in production. But the federal government has very limited ability to actually control anything. Blaming the upstream companies, well, they're responding to pressures from investors. Okay, their whole deal at an upstream, and not just upstream, but all these companies, all these corporations, is responding to investors in real time. And the investors over the last year have demanded that those companies return a higher rate of return. And so they've all drilled as much as they can and maximize revenues and returned as much of that to the investors as they could. Did you blame the investors? No. Why would you blame the investors? They're investing in an industry that has a lower rate of return than other industries they could invest in. So that's a natural thing for them to demand a higher rate of return, right? So, I mean, it's just the nature of the market and the way it develops. And if I were to blame anyone, I would look at Saudi Arabia and say, what in the world are you doing? I mean, you already went through 40% of your sovereign wealth fund the last time you crashed the market in 2014. And you haven't recovered that. Now, what are you going to do? You're going to go through another 40% of that in another failed effort to grab market share? Because as we saw in 2015, 2016, we had more than 200 bankruptcies in the upstream business. And what happened? All production in the United States went up. Because when you declare bankruptcy as a company, you don't go away and the production doesn't go away. You reorganize, you refinance your debt. The debtors, the creditors, unfortunately, bear most of the brunt of the filing, and then you come out the other side as a company without hardly any debt, and you're able to operate again, and you just keep going, and that's what happened. So, here we have the Russians and the Saudis both, I think, once again, betraying a complete lack of understanding of how the bankruptcy process and the market in the United States works, and so here we are. And we'll just, all companies, all U.S. producers can do is just sit and wait and see what these two irrational actors do going forward.
Well, David, one of the things that I was wondering about is a lot of the problem that we face in the market for the last, I'd say, 2 weeks has been the coronavirus. Yeah. And from the market standpoint, it seems to have had much more of an impact on oil price than I believe it should have. And from my understanding, that is one of the things that instigated this the issue that we see with the Saudis, with the meeting. And so when I say who's to blame, there's a part of me that wonders how much impact is the coronavirus having on this. So if you take the coronavirus completely out, yeah, it's having a big hit. And I think part of the blame could go to that as something. I don't know. I don't know exactly who to blame, whether you say the media or whoever is instigating all this hype around the coronavirus. It's putting pressure on the oil and gas industry that shouldn't be there. So I think if you took the coronavirus out, it could be pretty significant, this deal with OPEC for sure. I can't even imagine what it would be. Go ahead.
Yeah, and if we want to be mad at anybody in all of this, if you're an American and you're in the oil business or not, if you're an American, you should be angry at our national news media right now for the way they have overhyped this situation with the coronavirus. And they're doing it strictly for political reasons, in my view, in order to try to damage the Trump presidency. I mean, when we had the swine flu go through in 2010, the swine flu killed thousands of Americans and infected millions of Americans. And there was no hype like this in our news media. There was no effort to create a panic in the population by our news media like we've seen over the last month. And where are we at? We have 22 people, unfortunately, who sadly have died from this thing, and 400 or 500 people who have been proven to be infected. The flu, since September, the common flu has killed 32,000 Americans. And there is no panic in the news media. There's no daily update on the number of deaths from the flu virus in our national news media. So there's no question that particularly CNN is the worst actor of everyone, has made every effort to create a panic in our society over this. And it's had a big impact in the oil markets and in the stock market. And everything we're seeing today is kind of a result of this panic that's growing in the United States.
Yeah, there's no doubt about that. There's no doubt that.
Well, you asked me, that's my
no.
answer.
I agree. I say there's no. I think that there's no doubt there's media bias where you're talking about CNN, MSNBC, Fox, whomever. But also,
yeah. And by the way, Fox has been really bad on this too. So it's not just.
No, well, the other thing I'll just say is, David, is that I do agree that there is some political potential there as well. But most of these cable networks, they need ratings, and so what else to do but hype up some virus that you think is as the end of the world and scare people, right? Because it makes them watch TV and they sell commercials, and it's kind of funny because what was it about a month ago on this show we broke the news that the Russians would be actually working to help by Bernie and Warren and all those folks because of the ban on fracking. And like within 3 days, all of a sudden Washington Post comes out with it. And, it's just, it's so funny because it's so obvious, even with a brain, that the Russians would like to see the U.S. quit, stop fracking. It helps their economy. But the mainstream media, I'm just saying that they are some of the dumbest people I've ever seen in my life. They're stupid. They're incompetent. They're morons that look good on TV. And so I was watching something. I'm gonna get on a little rant here for a second because I was watching something from CNN yesterday, and I guess Trump tweeted out a clip where Biden stumbled over his words and said that it would be great if we reelected Trump or something like that. And,
right.
And so he cut that clip and he retweeted it. And obviously anyone who watches that, I've listened to myself on this podcast when I've edited it before, say things that was the 180 opposite of what I meant to say. Like, oh, wow, I didn't mean to say it like that. But anyone watching the clip obviously knows that Joe Biden wasn't saying, let's endorse Donald Trump. It's a joke. It's funny, but they were like, oh, how dare you? I'm like, guys, you bunch of freaking morons. Like, first off, go read your comments in the feed here because everyone that follows you hates Trump, so they're already piling on. So he didn't convince any of those people. Secondly, his base already loves him. Thirdly, we all know it. People stumble over the words, especially Joe Biden, and so they're just some of the dumbest humans I've ever seen. And it's funny because I'm old enough to remember, David. You're older than us, so you might remember this. Do you remember when Trump and the Russians were buddies? Do you remember that story? It's been a long time ago. Do you remember that?
Well, some people are still trying to push that deal. Rachel Maddow still tries to push it every night.
Okay, because it seems like right now that Putin is not doing Trump any favors if they were buddies.
Yeah.
I'm old enough to remember that. I'm old enough to remember all of the conversation and the talk about it and all that going on. And, it's like, it's so frustrating.
Yeah, because it was like 5 minutes ago. Yeah.
It's so funny because when whatever you want to say about what you think happened there, let's just put that for the side. obviously, let's say that Trump and Russia did collude. Well, they're not BFS anymore because the Trump administration just sanctioned Rosneft the other day, and then now the Russians are trying to put the shale producers out of business, or I don't know if they're actually trying to, but that's the result of their actions. It's like, hey, dumbasses, just use your brain once in a while because it's not that hard. I'm sorry, David. You got me riled up. You should have brought in CNN, David. You should have done it. I'm blaming you for that.
Sorry.
I'm blaming you. I just don't understand.
Didn't have my non-controversial talking point.
No, it's just so frustrating because, and I know you know this. It's just these aren't Josh and I aren't the brain trust here. So if we can figure out these little things, and surely these folks getting paid millions of dollars on TV can put two and two together.
It's not rocket science.
No, it's not rocket science. It's not rocket science. So, what do you think, though, about, speaking of Trump, what do you think? I had someone this morning text me quite upset with Trump's response about the gasoline prices. And, they felt like he was diminishing the real pain that you're going to see in the industry. That, hey, these are folks that are going to lose their jobs, lose their money. And here's Trump saying how great the gas prices will be. And then, obviously, from a certain standpoint, the low gas prices do help people in the economy, but they also mean people could lose their jobs and houses and things like that.
Sure.
So, what are your thoughts on Trump's tweet this morning?
But of course, from an economic, the standpoint of the economy, yes, lower oil prices are going to mean lower gasoline prices, and for people, the 98% of the population here in the United States whose jobs are 98% probably doesn't depend on the industry. That's good news for them, and it's good news. It'll be a boost for the economy that kind of offsets some of the pain. But there's no doubt the administration understands that a collapse of the oil and gas industry in this country would have a major spiraling economic impact throughout the whole economy. Okay, I mean it's not like the oil business is isolated here. It supports every facet of our economy. And so there's going to be spiraling impacts or cascading impacts from a downturn in the oil business throughout the whole economy. And there's no doubt about that. But yeah, there will be lower gas prices. So that'll help some people's pocketbooks to some extent.
So let me ask you a few rapid fire questions here. Let's kind of go through some stuff that we talked about. Do you think moving forward, the Texas Railroad Commission should put those limits on as you argued for whenever in the Forbes piece you mentioned? Do you think they should do that today?
Well, no, I thought they should have done it 2 years ago. I don't necessarily think it'd do any good today, because if this turns out to be a long-term price war, that's going to be what the impacts are going to be anyway. Government efforts to control production and prices are very difficult to control, and I'm always skeptical of how much good any government agency can really do anyway in an emergency situation. So as of today, right now, no, I don't really think so. The other part of it is trying to implement allowables like that through that process would take several months. And by the time that all got done, this whole thing could be over. This whole thing could be over before the end of this week if Saudi Arabia really is bluffing Russia, trying to get Russia back to the table here. So, I mean, we're talking like this is all set in stone, and quite frankly, I still hold out some hope that it really isn't. But we'll just have to see. But no, as of today, right now, today, I wouldn't advocate that.
So President Trump announced, I guess, a week or two ago about making a strategic reserve sale. Should they postpone that? I know it's a little ways off.
Definitely, they should. That should have never become a thing anyway. I mean, it's just stupid. So when that provision was passed, that was the Budget Reconciliation Act. Last September?
Yeah.
I guess when they did that CR that had that in it, and oil price at that point in time was over $60, and they thought they would raise I don't know how many $40 billion or whatever.
Right.
And now the price is going to be half of that, because that's scheduled for early April, isn't it? If I remember right.
Yeah.
So you're not, number one, you're not going to get the budget impact you thought you were going to get. Number two, it lessens our national security in case of a true interruption of oil flows from Russia and the Middle East. And why are you doing it? You're doing it to have a pinprick impact on a budget deficit that's going to be $1 trillion this year. So it's not like you're making any real difference in the total budget picture anyway. So yeah, it definitely it ought to be the first thing the president does in response to this. In fact,
Well, President Trump, we know you listen, so there you go. Go ahead and take your cues.
tell him I said so. He'll listen.
With the change, Ron Sitton, we didn't talk about that because it happened, I guess, between shows. You lost the primary, and so he will not be returning to the Railroad Commission. Do you expect a shake-up on the flaring policy moving forward after the elections are done in November?
Yeah, I don't know enough about Mr. Wright to know what his views on flaring are yet. He only spent $13,000 on the primary, so we haven't heard a lot from him. I've gone through his website, and it has some information out there. He is an advocate for stronger regulation of flaring, and frankly, I think probably all the commissioners will be after this election. The Democratic side, I'm going to forget her name, and I apologize to her. I think the attorney out of Dallas, who is an oil and gas attorney, is it Castaneda? I'm forgetting her name. Anyway, she'll probably end up being their nominee, and certainly she would be an advocate for much stronger regulation of flaring. And the other side, the other thing that's happening, of course, is the industry itself is making efforts now to become a lot more proactive in that space. So by the time election November comes around, we may have already seen a very substantial reduction in flaring in the Permian Basin, and it won't be as visible an issue. But something that, my criticism of the industry, and I don't like to criticize the oil business because I love it, but my criticism of the industry has been that this has been a lingering issue that has had a major impact in every shale play for the last 20 years. And it's something the industry should have effectively dealt with a decade ago, and here it is still lingering and becoming a bigger issue, frankly, this year than it ever has been, and that's just not a good look for the industry.
David, I had something I read. I discussed this a little bit with Ryan pre-show. The idea of setting a pricing floor for oil, say like $50, where basically there was a guarantee that the government would force oil to as low as it could go would be $50. Now, you mentioned that there's all sorts of complications when a government agency steps in to do something like that. There are ideas floating around that might be better than life with oil at $25, $30 a barrel. What are some of the complications and reasons that we don't want to go that route with the government stepping in to do, say, a $50 pricing floor for oil?
Well, that, and of course, we've periodically, during my time in the industry, every time there's a downturn, you see mainly smaller independents begin to advocate for that. And it's been a consistent thing since the Reagan years, really since the Carter administration, and, never gotten it done. I understand, I've always worked for independent producers in my career, and understand the needs and concerns of independents around that. But it's like you say, this is an industry that has prided itself on being opposed to government interference in its business, and it's a difficult thing to explain that when times get bad, suddenly you're asking for the government to save you, right? That's the first thing. The second thing is it's very complex, as you noted. There's always a price to be paid. Anytime the government intercedes, particularly the federal government intercedes in your business sector, they're always going to exact a price from you some way, somehow. And just because you have an administration right now that has been very friendly to the oil and gas industry, after November, you may end up with an administration that wants to put your industry completely out of business. So the more you engage the federal government in your business sector, the higher the risk becomes of an election going the wrong way, and suddenly, they have this new lever of power over your business sector that they didn't used to have. So I would tread very cautiously on advocating that with this particular president, because he's so unconventional, he might actually do it to you.
Well, and the other thing, David, is why $50 a barrel? Why not $100 a barrel? Why not $1,000 a barrel? We'd all love $1,000 barrel oil. And so, it's the same thing, the minimum wage, or the livable wage, or whatever. It's the same argument. It's like, well, who picks this number, and why is it arbitrary? And
well, that's right. Because the last time, the first time I saw it advocated in the early 80s, producers were begging the government to guarantee them $20 a barrel. And then in the 90s, they wanted 30. And, and so it just depends on where the price happens to be at the time, what you're trying to support, right? And yeah, it's a lot more expensive to now be profitable in shale plays. So you would need at least a $50 floor. But, the other side of that, from the government's perspective, when you are looking at a budget where you have $1 trillion deficit, you could raise an awful lot of money with a $50 price floor on oil coming in from overseas, man. Just think of how many billions that would raise every year for the federal government. And this is a president who loves to use tariffs, and that's what it would be. It would be a tariff on imported oil. He loves to use tariff to influence the behavior of other countries. So if producers band together and request something like that this year, they might accidentally get what they're asking for.
President Trump, I am officially asking for $1 billion podcast per episode relief fund. So, I don't know.
Give us the money. We'll fix all this.
That's $1 billion per year for the podcast. So that's what we need. Whatever that runs per episode, we need that kind of base floor. We'll go down to $500 million right now, but yeah, we want a base floor for podcast release. So just to get that out there. Okay, David. So I know we covered a lot of ground. Let's kind of circle back around now. One thing you made clear is this could change tomorrow. By the time this podcast goes out, it could change. But if it doesn't, or if we don't hear, let's say no news, not if it doesn't change, which would be no change, but no news, at what point does no news become truly bad news where this is, I hate to say beyond the point of repair, but you know what I'm saying? Like, at what point do we go, oh boy, this is really bad?
Well, I think if we get into summer and we're still sitting here with no action having been taken by OPEC, and the Saudis are flooding the market, and you got a $20 oil price. If this were to linger for 2 or 3 months, then it would take the industry many, many months to recover from it, regardless of what happens next. Because you're just going to end up at that point with a bunch of companies already having had to declare bankruptcy, and an awful lot of, we have about 820 active rigs right now. You'd have a rig count, I would predict, in 2 months, if nothing changes, you'd have a rig count of around 400. And that means layoffs, and that means not just of crews, but you're not going to have as many trucks running. So it's going to impact truck drivers. It just, it cascades throughout the economy. So that's where you're going to be. And the problem is, when service companies, and not just, but producers too, any company, when you start laying people off, and even if the market comes back rapidly after that, it becomes very hard to hire those people back, because people get laid off, and you're like, well, my God, I don't want to go back to work for that industry. And it's something that our business does to itself in these situations where you lay all these folks off, and then things start to recover, and you have to go through that whole process of finding and training up people again. So it's just it's a tough deal, man. I just hope and pray we have cooler heads prevail this week and something happens very quickly.
Yeah, and as the owner of a service company, I can tell you that's the worst part, is that we are in such limited control right now. It's really about the balance sheets of our clients, what they decide to do. And, if they start cutting projects, we have no option, and that's where a lot of our listeners are at too. They work for service companies, and there is no recourse. There's nothing they can do. There's no, Because if you're working for, and I'm making up random names here, but if you're working for Exxon, we'll use big names. You're working for Exxon, and Exxon, decides to cut service providers. Well, who are you going to go get? You can go get BP, Chevron, insert whatever name here, Marathon. You go try to pick up one of those companies. Well, those companies are either cutting their service people, or they're locking down, and those service companies are tripling their efforts to keep those clients happy because they know that they can't go pick up Exxon now, and so it really hurts the job market, as you say, and it makes it hard
it really does
to pick folks back up. So again,
and the other thing it does too, when you're talking about from an employee standpoint, is it discourages college students from wanting to major in petroleum engineering and actually come into the industry out of college.
Yeah, so if Trump wants to, if he's doing floor pricing, I can send him some basement pricing for our services as well, so we can get that worked in there. I'll be voting for Bernie if I keep it up. Well, David, I'm sure you'll have a lot of stuff this week coming out on Forbes, I suppose. Where can folks that want to follow this week, where can they follow you at, and kind of keep up to date with what your thoughts are on the news as it develops?
Yeah, if you want to follow my writing at Forbes, it's forbes.com/David Blackmon, all one word. And then I'm at Shale Magazine. I'll have a post up this afternoon with some thoughts about it at shalemag.com. And I think we may end up doing a podcast at Shale Magazine on all this sometime midweek as well. So not to compete with you guys, but, there's a lot to talk about and a lot of news to get out to people.
We're like the Coca-Cola of oil and gas podcast, David. Our next competitor is so far down, it's okay. So come on, there's plenty of room. Of course, after the industry lays off 75%, there won't be anybody listening, but still.
Oh no, that's not going to happen. Let's not say that. We're a long way from there.
No, I know we are. Hopefully everything will turn on a dime, and we'll be laughing about this podcast 2 weeks from now, going, they cured the coronavirus, and the Saudis and Russians decide to cut production 100%. Look at the prices now. So, for the listener's perspective, Ellen and I will be recording an episode today as well on her perspective on OPEC and the Saudis. So if you're curious what she has to say about that, that will be coming out on Energy Week podcast. So, David, thank you for coming in. We will have a full link of all the articles that Stephanie turns it in, and we did not get to them today because we had David on. He was gracious enough to give us almost a full hour. So, David, thank you for that. But be sure to check out the show notes, and Stephanie's articles will all be linked there, and we will talk to you guys next week.